Hello, everyone. This is Chris Fleming with Lender Chat, and I'm super excited to bring you a very special guest today. I think this is going to be really good content. KFP Investors LLC, your local and also almost national, 38 states lender for investment real estate. We are licensed and we lend in 38 states. We do investment real estate only, terms from 6 months to 40 years. So give us a call, check us out. And before we move any further, I do have to share our disclaimer. So that is, we are not attorneys, CPAs, or CFPs. We nor any of our companies give legal, tax, economic, or investment advice. We disclaim all liability for the action or inaction taken as a result of communications from or to us, our employees, contractors, clients, prospective clients, sponsors, or participants. You should always consult with your own counsel, accountant, and other advisors as to legal, tax, economic, investment, and other advice. So basically, this is for educational purposes here. We're having a good time and we're sharing with you what we believe and we know. So let me cut out our disclaimer here. And I am super excited to introduce to you my business partner, Miss Jen West. So she is co-owner of KFP Investors, and jointly we also co-own Wild Fig Financial. Jen, thank you so much for agreeing to do this with me. Can you tell us a little bit about yourself and what got you into investment real estate?
Absolutely. Thank you for having me today. I'm excited to get to share, our topic today. So I always believe with, I guess, being genuine, leading with vulnerability. So I think my path to where I am probably involved a good bit of failure. Um, and so, yeah, I typically like to give a little bit of that information. Been in finance for about a decade, have always been a very hard worker, been very motivated. And I guess maybe several years ago, I kind of hit this just wall and experienced very severe burnout. And at the time, just essentially walked away from lending. Um, I found that at the time it was really helpful. I took some time off. I actually at that point said that I was never going to be in lending again. Funny enough. But I took some time off and I just realized that I had been a workaholic for a good part of my life. It had caught up with me. And at that time, I started to really embrace, what works for me. I am a woman in finance. It's a male dominated industry for the most part. And so I felt like I was always trying to measure up, be good enough. So at that point, when I struggled from burnout, I took some time off, really got inspired and started leaning into what works for me. And out of that, Wild Fig Financial was born. I am extremely passionate about helping underserved communities and women invest in real estate. We do it very different. Women do than men, and neither way is right or wrong. But I always think that it's good to lean into your strengths, and so
Agreed.
that is how I came to start Wild Fig Financial. We specialize in helping people grow their real estate portfolio quickly. And then this year, I also became an investor myself. And
I love that for you.
I know. I am now practicing what I preach and excited about that. So that's a little bit about how I got to be here.
That's one thing I love to tell people about our strengths is that we do investment real estate financing by real estate investors. And there's a dramatic difference between people who understand the business model because they're in it
Mhm.
versus versus not. So um, so I know the topic that we're talking about today. I'm super excited about it because it has been called the Holy Grail of investment real estate financing. And you have much greater expertise in it than I do. So I always defer to you on this topic. Will you please tell us, what is agency debt on investment real estate? How does it help us? What does it do? What are the drawbacks? Start anywhere you like.
Okay. Um, so yes, agency debt, I feel like, is one of those secrets. It's becoming more well known, but it's one of those secrets that really is a game changer when it comes to multifamily properties. So agency debt, it's a government sponsored entity that provide permanent loans for multifamily properties. There's only 26 licenses issued to lenders in the entire country. So it's not something that everybody can do. We actually broker with some of the top companies that are able to do this. And it's going to be for a little bit larger properties. So typically we are going to want 5+ units, and our loan minimum normally is about 1.2 million. So it's going to be for larger multifamily properties. When we're talking about, you know, under 9 million, we're typically going a $9 million loan. We're typically going to consider that small balance. And so you still have incredible terms with small balance. But when we get above that 9 million mark, 8 to 9 million, typically we start to see even more incredible terms. The terms are normally 3 to 30 years, and then the amortization is 30 to 35 years. They are non-recourse, which we love, and you
Can I,
can, yeah,
sorry, can I stop you for a minute and just
yes,
get some clarification for folks who may not know?
yes.
So, first of all, let me say I've already learned something because I thought it had to be 20 units or more. I also thought that the minimum loan amount was 2 million. So thank you for clearing that up for me. I do have to say I internally chuckled when you said 9 million or less is small balance, because of course with KFP investors,
Mm-hmm.
we're talking about a minimum loan amount of like 100,000 to 150,000 depending on the deal.
Mm-hmm.
So by that recognition, then pretty much everything I've ever done is small balance. You're definitely the bigger fish in this pond. So thanks for letting me hang out with you. Um, but also, can you explain more what non-recourse means and why that's important?
Essentially, you personally are not on the hook for the loan. So it also means that you're typically not providing your tax returns. So there's, huge benefits when we're talking about non-recourse.
Okay.
Yeah.
No tax returns. I hope folks heard that. No
Mhm.
tax returns. Yay. All right. So tell us more. I'm sorry I interrupted you.
No, I love the conversation. We can go up to 80% with a 1.25 debt service coverage ratio. Essentially, the DSCR, debt service coverage ratio, it's the cash flow of the property. We can typically evaluate those pretty. We can do a quick and dirty evaluation, um, to take a look at the cash flow of the property. And I feel like a lot of people, when they've started, if they've done multifamily, they have probably done smaller units. So if we're talking about a bank, they're always going to be doing a global cash flow. They want to look at the cash flow of the property and then the cash flow of, any other businesses you own. And then a DSCR loan, which normally is for 1 to 4. Some lenders will go up to 8 units. That is just looking at the income of the property. It includes taxes and insurance, but it's not considering any of the operating expenses.
Nor the operator's personal income.
Correct. Yeah. So, when we're looking at agency, we're looking at the debt service coverage ratio, which is going to be evaluated differently. Essentially, the cash flow of the property determines the value of the property. Whereas in that 1 to 4 space, we're just used to, this is the appraised value,
Right.
So that is one reason that the debt service coverage ratio is very important. They do have very, inside the box guidelines. So, the terms we've talked about are pretty standard. There's not a whole lot of room for creativity. There's a couple ways we can be creative. One of the hugest benefits is the interest rates, I find, are incredibly low. So
do tell. Everybody wants to talk about interest rates all the time.
So I will give the disclaimer. I hate the question, what are the interest rates? Because that is always dependent on so many factors.
Asking how much does it cost to buy a car with no additional information about the car.
Yes.
So it could be $100 and it could be, $5 million, depending on the car. So I completely agree with you. I do want to state that as of today is August 9th, 2024. I looked at Freddie Mac's website for average 30-year primary residential fixed mortgage rates. And this week's average was 6.47% for a 30-year mortgage. So how does that compare to what we're seeing in agency rates for larger multifamily right now?
So again, it's always going to depend on all the factors. But I've been pricing several things out this week, and we were easily able to get into, high 5s, low 6s.
Wow.
So, sometimes we can do better than that. Again, we have to look at the overall terms, but it's really a game changer to have rates that are that low with up to a 30-year term, and potentially up to a 35-year amortization. So I feel like in normal economies, a lot of times banks are very competitive with each other. And so when you have a product that, beats bank offers, that's pretty impressive. And we were working on one with one of our teammates this week. And I think they had priced out like 10 lenders, and we came in with the best terms of 10 other lenders. So that was really exciting to hear.
Love to hear that. Yes.
And I think it's very exciting because we've been in a higher rate environment here for a good little bit. And so I think a lot of people were just struggling to make deals pencil out. So those are probably most of the advantages.
So if it's that great, why doesn't everybody do it, Jen?
So they typically like, there's a few reasons. They obviously, the property itself has to make sense. They do like experience. There's And there's a couple things like with experience, there may be a potential workaround. We always look at that on a case by case basis. But essentially, if you have never owned multifamily and you go, to buy a property size with agency debt, it's going to be more challenging. So they like experience. We do have to have that loan minimum of 1.2 million, and it has to be at least 5+ units. And depending on your market, I'm in Knoxville, you're near Nashville. That's pretty easy, to get multifamily of that size. In some of your, smaller markets, it's it can be more challenging.
Sure.
So, and then of course the terms, we want to, with anything, we want to make sure we're structuring it correctly. So, agency debt, can, essentially be subject to yield maintenance. So that is a clause that ensures a lender receives the same yield on a loan that's paid off early. It's going to compensate them for the loss of interest income. So let's say we do a 30-year term and your strategy is selling it in 5 years. We've really done you a disservice, because that's going to be expensive to exit out of that. However, like I said up front, we can structure that appropriately if we know that. So that's why I'll always say strategy is important. I tend to ask a lot of questions when I'm talking to somebody new. I feel like sometimes they feel like it's an interrogation, because I'm like, well, tell me about every single asset that you own. Tell me about your long-term goals. And so,
and where do you want to be in 5 years or 10
yes.
years? Yes, I feel very similarly. I completely agree, though. I want to repeat back to you something that I think you said, and I want to make sure that I've got it correct. Did you just say that even though agency debt sounds amazing, because we all get starry-eyed when we hear about those interest rates, it might not be the best choice if I plan to not hold the property for a certain length of time?
It may not, or we can structure it so that, we can structure it with terms that allow you, allow you to refinance, sell, whatnot sooner. So if we know that up front, it doesn't mean that agency is not an option. It just means we need to know that to structure it correctly.
So the point I'm trying to make is the lowest interest rate is not always the best option.
Yeah.
Is that right?
Exactly. Yeah.
Yeah. I think a lot of clients need a lot of convincing to believe that that's true. Yeah. So I'm just so glad to hear a second voice in the wilderness echoing my same sentiments. The lowest price is not always the best option. Absolutely.
Yeah.
So you were talking about structuring and asking lots of questions, and making sure that what you're putting a borrower into, an owner, an investor into, is the right deal for them. Can I use agency debt for a value add opportunity? If I'm going to buy something that's below market rent, lots of deferred maintenance, can I buy it with agency debt and use that money to correct the deferred maintenance?
If we know that, what you're saying more or less makes me feel like that property is not going to be, for the purchase, is not going to be an ideal fit for agency debt, because what you have said makes me think that the current owner they have deferred maintenance. It's not being upkept as it should. They probably haven't done rent increases as it should. So in that type of scenario, we're seeing this quite a bit. We see sellers want to get essentially as much as they can for a property. And so they will say, this is what it's worth for current market rent. However, current market rent for this loan type, is not what we're going to be using. We're going to be using the historical rents. The historical rents are going to help determine the value. So in that type of situation, what I am going to typically see is the buyer and seller kind of meet in the middle. So the seller is, comes down as a little bit more realistic about the sales price. The buyer may, pay a little bit more of a premium than they would like to, but typically we're going to use some type of bridge financing for the purchase, the renovations. However, when we have stabilized the property, so we have gotten any deferred maintenance taken care of, we have got everything up to market rent, then we can look at coming and doing agency debt. And this is where, if you know me, you know that I always get very excited when it comes to creative options. And so I have to stop myself and make sure that I don't just be like, oh my gosh, and ramble off with all kinds of jargon and excitement. However, I always get excited about anything that's creative in lending. And so I have a client, and they own a current multifamily property that they have renovated, stabilized, and then they're purchasing a smaller 6-unit property. Now, this 6-unit property they're getting for a great price. So they're purchasing that smaller 6-unit, and it is very close to the other multifamily property they have. So one of the things that's nice about agency debt is you can buy similar properties, multifamily properties that are within a close proximity of each other. Typically they like a quarter mile to a mile. Can be possible to do more of a distance. But they essentially allow you to buy properties that are close together, and they allow you to kind of mix and match. So she's going to be doing a cash out refinance for the larger multifamily property. And if we had wanted to, we could have combined that with the purchase of the 6-unit. Now, for her situation, it made sense to do bridge for the 6-unit. So that's what we're doing. But we're going to do a cash out refinance for both properties at the same time. I've got another client who has a 5-unit property, and he has quite a bit of equity in that. And he was looking to purchase another multifamily property combined. We obviously meet that 5 units. We meet that 1.2 million minimum. So that was, I think the creativity in that, how we can do a purchase and refinance at the same time, or purchase, more than one property. And again, I'll never say, with the terms that I said, again, typically agency is very, in the box. However, I always recommend having a conversation, because if there is a creative solution, I feel like between the two of us, we always, lean into that and find that. So
I get equally as excited.
Yeah. It really opens up, the realm of possibility when we can take some of those, creative paths towards property acquisition.
So I want to make sure that what I heard is correct. So if I purchased a property and I did not use agency debt for the purchase, I can still refinance with agency debt.
Mm-hmm.
So just because I don't already have it doesn't mean I can't get it.
Mm-hmm.
And
yeah,
bridge debt is available for the purchase, or may be available for the purchase and the rehab and the stabilization of the property, so
mm-hmm.
that I can then refinance it with agency debt.
Mm-hmm. Yes.
Amazing. Okay.
Yeah.
All right.
And again, you could potentially be doing a refinance of one property with a purchase of another property in the same loan. So,
In the same loan.
in the same loan, because
Wow.
sometimes if we've got like a 5-unit, that 5-unit may not be worth 1.2 million.
Oh, now I understand the mix and match.
Mm-hmm.
I see. I am learning so much about this. Thank you.
Yeah. So, for example, one of the properties we were looking at, I think that, the valuation was coming in around 1.1 million. So we were short. But then again, we asked a lot of questions, goals, future considerations, and that's where we identified another property in a similar area they were looking to purchase. And so that would have been something that we could have done at the same time to meet that 1.2 loan minimum.
I love that.
Yeah.
I love that. And so thank you so much for this education today, not just for myself, but also for our network. I'm really looking forward to sharing this video. I want to be respectful of your time because I know you have millions and millions of dollars to go lend out. So let me ask you, if you could give your younger self, we always ask this question, if you could give your younger self 3 pieces of advice, real estate related or not, what would you tell yourself?
My younger self, I would probably say be yourself. I really believe strongly into, leaning into who you are and not caring, what society says is cool or hip or whatever the kids are saying at this point. I think take the risk. And then my third piece of advice would be to embrace failure.
I love that. I love the concept of failing forward.
Mm-hmm.
That I have often said to my children and my clients and my loved ones that there are no mistakes. There are only learning opportunities.
Mm-hmm.
And if you take a negative outcome and you find the learning opportunity in it, you remove the power of the mistake.
Mm-hmm.
You take back that power for yourself. I love that. Also, if I could tell younger people, as many as possible, that do not worry about conforming to who anyone else tells you you should be.
Mm-hmm.
Find who you are and be that person. So I just want to echo what you said. And then I think the second one, I don't want to gloss over that because it was so good. The second one was take the risk,
Mm-hmm.
right?
Yeah.
Don't, you're much more likely to regret things you did not do than the things that you did do. Again, back to the make it a learning experience. One of my favorite quotes is from Thomas Edison when he was asked by a reporter how he felt about failing in inventing the light bulb over 10,000 times. And Edison's reply was, I have not failed 10,000 times. I've just found 10,000 ways it won't work.
Literally, that is was yesterday's quote.
Stop it. See, this, now you all know why we work together and have businesses together. Very common thinking styles and amazing complementary skill sets, I think. And so, Jen, if we want more information from you, if we want to talk to you further, we've got a scenario that we want to run past you, how can we contact you?
Okay, that's a great question. So if we're looking at an agency scenario, typically the documents we want to look at up front are the rent roll, the buyer's personal financial statement with a schedule of real estate owned, and the T12 trailing 12 months for the subject property. So that's the documents that we want. And then my email is jen@wildfigfinancial.com. And I believe I shared a Calendly link with you. I have a couple different options. So one of them is a complimentary discovery call. And then we also have an option that is a higher level in-depth strategy call that's a paid consultant option. So, clients are free to book those with whatever they feel is appropriate.
Thank you. And when we post this on the interwebs, we will make sure that all of that information is also at the end of this video in writing, so people can pause it and copy it down. Thank you again so much for educating me, for educating our KFP audience today, and love what you're doing, and let's go kill it.
Thanks. Have a great one.